All right, so today we're going to talk about the lender questionnaires. It's a hot topic with GetDocs now. We've been talking about lender questionnaires for years. And so now we're going to talk about 2022. What's new with lender questionnaires?
Well, I've always wanted to know what the differences are between old and new. So we have some new changes in 2022. Do you know what they are and how they affect us now moving forward?
Yeah, so we've seen, as we've talked about in the past, Joe, we've seen changes over the years with these lender questionnaires getting more and more details. The big thing this year, the big change this year was a change that was made with Fannie Freddie. They had a meeting in October of 21, made some changes, and now they said as of January 1, 2022, that in order for a loan to be purchased by a Fannie Freddie backed lender, it must meet certain requirements, and that has changed everything.
And it's all contained in the forms that are used in common, right? I mean, what about lender questionnaires from lenders?
So
And I bring that up not to convolute, but to be clear.
No, absolutely. So
Yeah.
what we focus on is the Fannie Mae Freddie Mac Form 1076 476, which is the national standard. It's been out since March of 2016. Happy anniversary for the Fannie Mae Freddie Mac form as we record this on March 1st. So it's been the standard. But like you said, the bank specific forms or lender specific forms, they put whatever they want on there. They've asked all kinds of crazy questions for years. And now what we're seeing is on what we consider to be the standard form are some questions that are more in depth from a management company person fulfilling the orders, less clear questions. It's we've seen a lot of changes in that.
Less clear questions. You wonder if there's a direction they're going in, but you don't know. So do you want to necessarily answer less clear questions on an independent third party's questionnaire of sorts, making it look like something more required when they're saying, look, our underwriter wants it, so you feel they want it, they need it, they're making the loan, but really you don't have to. The thing you have to do is the form we're talking about today, right?
Well, let's say this. The form you have to do is no, you don't have to do any.
Really?
Yeah, absolutely. So there's no law, there's no requirement, legal requirement for a manager or management company or an association to fill out any lender questionnaires.
Why do we
Period.
jump through these hoops then? Seriously. I mean, why do we do that?
We do it because the lenders call the management companies and say, if you don't fill out this form, this loan isn't going to go through and you're not going to have any residents in your condominium. And they threaten them, they harass them. And so because of that, the management companies fill out the forms.
Not to go on a tangent or anything, but I mean, if they didn't fill out the forms, what do you think would happen if they just didn't do it? So we're going somewhere with this.
If they didn't do it at all,
yeah, would deals fall through necessarily?
I'll tell you this, in the 11 years that I've been with the company and the 11 years that we've been telling people about lender questionnaires and not to do custom forms, we have not one time heard of a deal that actually didn't go through because a custom form wasn't filled out. However, they did fill out the standard forms. Recently I had a conversation with someone who claims to be in the know, and what they told me was, if they don't fill out any lender questionnaire, the worst case scenario is that loan might get sold at a little bit of a higher rate, or at let's say a little bit of a premium, right? But that the loan would still go through.
But it won't be shunned from the secondary market. It will not be not sold. It might be seen as, what you're saying is risk a little more. Risk, yes. You get a little less, you have to pay a little more risk on these bundled that did not have this form, but they're not going to not be sold in the secondary market. People want to make money. Most probably these loans have gone through other ratios and income and expense. They've gotten approved on other things in this one form. It's really, the way we see it, I wonder if you can elaborate, is it's a way to get information for some other time.
Absolutely.
And so I don't want to say like diabolical, but if someone is trying to gather information for another time, why? And we're not going to go off on that.
Yeah.
What I want to, if you want to expand on that, great. But then also dovetail into how this affects our clients.
I'm going to just hit a couple quick points on that and we'll move on.
Sure.
Future time, construction defect. One of the issues that lenders feel like maybe they're going to lose money if there's construction defect. That was a big thing 15, 20 years ago. And then we had the recession where a lot of people just couldn't pay their mortgages or didn't pay their HOA dues. And then the HOAs have priority liens. And so the mortgages were like, hey, how come the HOAs getting their money before we're getting our money? And so they're trying to find a way to put themselves in front of that priority lien. That's another issue there.
Champion South Tower.
Yeah, and then we have the thing in Florida, right, where the tower collapsed. And so now what happens? And that one is actually the most tangible because they can say, we know why this happened. We know why this collapse happened. And so that's kind of the most tangible from that standpoint. And that actually is the trigger for these changes that we see now. And the changes that we see now are questions. There's 12 new questions on the Fannie Mae form. And those questions all have to deal with building structure safety.
You know, you're an insurance guy from your background.
Yes.
You know people shift liability.
Yeah.
Would you give anyone the ability to shift liability on you? Would you ever in any way, even if there's a shadow of a doubt, allow a shift of liability to come onto you? Would you do that yourself?
Now that I'm no longer in insurance,
of our clients. I'm trying to get
absolutely not. When I was an insurance agent, that's what I did. Is I was saying, hey, look, for a premium, you're going to shift that liability onto me.
But aren't insurance companies that pay out on you buy insurance, they're trying to shift liability as well. I mean, that's why they have attorneys. If they don't pay out a claim, they made money by taking your premium and saying, but you don't qualify for us to pay. Right. There's a whole business in that. That is their business. Not to not pay, but to find liability elsewhere so they can go somewhere else. And if they're doing this to our clients and clients that use our competitors, what are we doing for our clients if we're not talking to them about this? So that's why we're doing this today, right?
Yeah, absolutely. That's exactly why we're bringing this point up today, is because we see our clients getting harassed by these by these lenders, right? And we see them being directed and said, you have to fill these things out and you have to give us this information. And so as we advise our clients, stick to the standard form.
Yep.
That's great. Okay. But the problem right now in today's world is the new standard form still has questions. Just yesterday, we had a lender asking for more information from the management company. The management company, the response from the management company, this is a management company we've been working with. They've literally, this person's been with us for 15 years. Okay. Really smart person, knows what's going on. And she said, her comment was, I wish these questions were less vague so we wouldn't get so many follow-up questions.
Why would they be specific if they want to shift blame? They need to be, when they fight their fight for specific in the court, then they'll be specific, but vague lets them pick anything they want. I wouldn't answer these questions. I refuse.
Absolutely.
I would just do it. And I think most of our clients kind of see it that way.
Our clients definitely see it that way. The thing that we've been talking about with them is if you're not 100% certain, don't answer the question. If you want to discuss it with your counsel, talk about it with you.
And we think you should.
Absolutely.
We think you should do that. And when you get to the nth degree, right, you should do it on every questionnaire at each time in front of your board, who has the right to answer those questions each time. If you had to do that every time, you'd refuse to fill them out. And that's the proper way. I want you to elaborate on that.
No, absolutely. Not only would you refuse to fill it out, but can you imagine the cost when you're paying for an attorney to review every one?
It would make those $1,000, $1,500 a piece.
Yeah.
The amount of time, and if the attorney spends 3 hours at least on each one of them to dissect each question, it doesn't matter if he did that on 1,100 other HOAs. He's still going to dissect the same questions and charge you because he's got to do the work for you. This is just costly.
Not only that, I think I mentioned this before when we talked with an attorney about this 4 or 5 years ago. This specific form We talked about it, and this attorney looked at it and said it would take me 50 hours to complete, honestly, and do a full review, 50 hours to complete this form.
5-0.
5-0.
And to me, I think 15 hours is too much.
Right.
I think 15 minutes. I think you shouldn't waste your time on this. But what are, I don't want to go off on a tangent, but like are there any questions that jump out that you could just bring in as an example that you go, I don't understand why they are filling this out?
I'll tell you.
As an insurance guy, you are an insurance
the very first question that it was added is, when was the last building inspected from a licensed professional? And so the thing is that the management companies, they don't know. In most cases, the last time the building was inspected for a building inspection was when it was given its certificate of occupancy, right? Unless there was an event or something that happened that caused to have another reason for an inspection. Now, that's not talking about the reserve studies. This is actual like a building inspector. Yeah, this is like for a building inspector, architect, engineer. Okay.
Yeah.
So, they don't know when those were answered. And so when they say we don't know, now the lender's going, but I need an answer.
Yeah, okay? But do they really need an answer on that?
They need an answer.
Back it up. They don't.
The reason they need an answer is because on their form there's a blank, and they need to fill in that blank. That's why they need most
entry level. Probably most of these are new, flustered. They don't know. They're pushing hard. They're putting pressure. They're trying to get this one answered, when in actuality, there's no way you should answer these questions.
Right. Here's another one. Is it anticipated the project will in the future have such violations?
How can you do that? Yes. No.
Yeah. No, I don't anticipate. So here's the thing. Yes, if they say yes, we anticipate in the future there could be such violations. Well, then loans denied because there's potential.
How are you
running? You say no.
How are you managing your people, right?
Exactly. And this is the shift of liability that you're talking about, right? If you say no, and then there is that causes a problem, they can come back to the management company and say, "Hey, well, you said no. You said there wasn't any."
It doesn't seem like there's much of an other, like not applicable. Should be a choice. Unknown. If you sincerely don't know, you should be able to say unknown, or under advisement of an attorney, I am not answering this question. That is an answer. And let your attorney fight it 20 years from now.
All right, Joe. Now you just loaded the question because you know that at Get Docs Now on this standard form, that's exactly what we do. We, even though it's to fill in the blank and they only give you yes, no options, we add options. Right? Because of the conversations we've had with our clients, because of the conversations we've had with attorneys, we've added those other options. So we do have those options available. Not answered per attorney's advice, not applicable, unknown, not tracked. That's one that's been around for years. That's not a new one, right? How many renters do you have in the community? We don't track that.
I have a hard time answering a question that could change tomorrow. The answer today is something. Someone closes on the house tomorrow. They put a renter in next week, and it's an incorrect answer.
Well, even still, as a management company, you don't track that. You don't have the ability. I've talked with enough management companies, enough attorneys to know you don't track that. And it's impossible. It's literally impossible to track.
And you don't know if it's a second home or, is it their brother living there temporarily? You don't know any of the situation, and there's no reason for you to.
Right.
All you do is run the community, make sure everything is consistent so the property value is maintained. That was the simple reason why we started the HOAs in the first place years ago.
Yeah. So those are some of the confusing or challenging questions. Obviously, there's a lot more than that, but yeah, those are some of the key ones that we see that management companies are saying to me, hey, I wish this was different, or this doesn't make sense, or we can't answer that.
Have we talked about how managers, I guess you can say our system takes care of it for them, but like, how are they dealing with the forms in general? We kind of talked, they're kind of afraid. They kind of come from a fear motivation. I got to get it done. It might hurt the owner, right?
Yeah.
But how are they dealing with the forms? Do you see it across the board? Some don't fill them out. some go crazy on it, and everything in between?
The majority of our clients, so we give our clients the options. We have the Fannie Mae Freddie Mac form, we have the HUD form, and we also give them the option to do a custom form. I mean, some people just want to do it, and so they have those options. So what I see for the most part is our clients are saying, I only want to do the Fannie Mae Freddie Mac 1076, especially now, because even when they fill out any of those other forms, even if they fill out, so let's say this, Fannie Mae updated their form in December of 2021, but the custom forms, the banks didn't necessarily update their forms, right? So what they did was they just created their own addendum that is attached to their form. So they're asking these same 12 questions in a more evasive way, in a way that suits their underwriting needs or desires, right? So they're just saying right now, I want to stay away from all that, right? It's bad enough I have to do this, but let me stick with at least a form that's familiar, and so they want to stick with that Fannie Mae Freddie Mac form. That's what I'm seeing in the last, well, let's say over the last 3 months specifically.
I would be wary of companies or company leading industries that have batteries of attorneys. I would just worry about companies that are Wells Fargo. That's bigger than me. What are the banks? Just name them, right? They all do this.
Yeah.
Chase, all of them. And they make loans. So he who has the money makes the rules, right? They say do it and people jump. If you don't, nothing happens. And if you do it in a certain way where you're doing it, where you're doing it at a level, this is my sum up. I'm going to ask you yours. You do it at a level where you're fulfilling, but you're not exposing. I think that's smart. I think that's how we run our business. So what should company owners take away from this conversation from your point of view?
From my point of view, I would say stick with the Fannie Mae Freddie Mac 1076 form. That is the standard. That's the thing that changed. And even if they're asking for a custom forms, really they're trying to get to those standards. So I would say, number one, stick with that form. Number two, take that form and your attorney to the next board meeting and sit down with your board members and say, hey, we need to fill out and we need to answer all 8 pages of this. We need to have this. So that way your board, as you mentioned earlier, has input.
Is this an exercise or you mean it?
No,
because if you do it, you're going to find out how much it costs. And the board has to, I mean, you got to pay the attorney.
I'm saying pay the attorney, go to the board meeting, get that thing filled out one time. Once it's filled out one time, then you can highlight the changes, right? There's things like you mentioned earlier that are going to change every day, but the majority of those questions aren't going to change from day to day. So once you have it filled out, you know what those answers are. And what you're doing is talking about passing liability is you're saying, hey, as a management company, I didn't complete this form. The board and their attorney completed this form. I was just the facilitator and providing that. So that's protecting you as the management company.
That actually is the best. That is the best way to protect yourself. Have the attorney involved from the very beginning.
Yeah, absolutely.
And doesn't the HOA pay for that? Not you as a management company.
The HOA pays for that.
The only problem with that is you're going to make your point because they're not going to want to pay them. They've got to be convinced that this is a good thing for them. They're going to start questioning the form. It's better. Wow, this is new. Yeah. It's better that you do this in a way, my opinion on this fresh new news, to go and do that and see that they'll push back, that the board will have an opinion on, we got to do all this for that. Why? And when you start talking about it with them, you could win them over to don't fill that out.
Absolutely.
In a way. So, but I don't see a lot of management companies going through this exercise, but I think if they did, they'd have a lot of people helping them push back. They'd all feel the same. But I like the exercise from that point of view. That really pushes the point home where, you get that attorney involved because the liability starts when you fill that form out and maintain to fill the forms out. So like if they're going to take you to court, maybe they're going to have access to all the forms you filled out for them. And they're going to see how inconsistent or consistent you've been. Yeah, this is really a headache that isn't hurting anybody right now. So why not fill out the forms? It's a mistake.
It's easier. It's easier. Yeah, it's easier. But like you said, what's the point of it anyway? There's a reason behind the form. There's a reason behind the questions, and the reason is they need to be able to. They're going to say make good underwriting decisions,
Right.
and part of making a good underwriting decisions is being able to pass on liability or shift liability.
Yes.
So yeah, so that's really what it's about. So I would say, don't do it unless you're 100%. Get the board involved, get the attorney involved, and stick with only one form. Because when you start looking at all of these other forms, imagine if you had one association and you had to fill out 10 different forms with different questions for that one association. What would that look like? And like you mentioned, if you come into court of law in discovery and they say, okay, we have all of these different forms that you filled out regarding this one association. Here's a discrepancy.
Done.
So yeah, so now liability.
Which one is right? Which one is correct?
Yeah. So it's a mess.
Yes. Well, it can be a mess.
Yeah.
They're creating a mess for the future.